Welcome back to another video, and if you are new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. Also, if you enjoy the video, please smash the like button for the YouTube algorithm, and as always, just let me know down in the comments below exactly what it is that you would like for me to cover in my next video. Now today we're going to take a look at gold from an order flow, fundamental, sentiment and a technical perspective, and look for the best probability in order to take a trade in the market. Now, for those of you that don't know, gold is considered a safe haven pair, and whenever there's uncertainty in the market, gold tends to react off that. Now, it doesn't have to be certain news, it could be rumors building up as well, and as a result of that, gold will start to move. Now firstly, we can see that here on the monthly time frame, so gold's been very bullish this month, riding at the back end, riding off the back end of the situation currently going between Russia and Ukraine, but nothing had happened yet. But yet gold has been moving. Now if there's one thing that you need to understand about investors is just like myself and you. Whenever they smell risk, they tend to get scared, and they tend to pull their money from stocks, you know, and they start moving it to gold. And as a result of that, this was just panic buying basically. As we can see that they just started buying gold, although that Russia had not dropped any bomb on Ukraine. But because of the tension that has been building up, and with Putin keep pushing each and every day, we can see how gold prices have started to rally. Now we're going to start here with a technical analysis. Now starting on the monthly time frame, the first thing that we can see is gold has broken above this very strong level of resistance. Now when the resistance get broken, that then becomes support. But if there's one thing I've learned back in the days, that when Donald Trump was still the president, your technical analysis is no match for their fundamental analysis. So from a technical perspective, we should be able to see gold pull back before the continuation. But if Russia drops a bomb today, then there's no pullback expected. Then we can just see the market continue higher, because technicals doesn't always line up. Their fundamentals has got a stronger value in the long term. Now from a weekly perspective, what do I have now on the weekly time frame? We can clearly see this was the last structure gold had created. In doing so, gold also printed this overextended W. Now after an overextended W, you expect a pullback to the left leg before the continuation to the upside. Now we can see how gold had been bearish, slightly bearish this week. The market also printed this triple top in the market, where the market had printed the strong level of resistance, and we could see the many times that the market had came to test that level, the market rejected that level quite aggressively. But once again, from a technical perspective, it is to understand how many retail traders will come in here and say that we should sell the market based off previous price action, and we could see it starting to melt to the downside. The only difference is now versus the two other times that gold was trading at this level is there was no war taking place there, like there was nothing that could move the price over this current level. And this time around, if anything does happen, we can definitely see gold move this price extensively higher. Now we're going to dive into the data as we move along. Now from a daily perspective, what do we have? Now from a daily perspective, you can firstly see how gold had been stuck within this consolidation phase. Market gave us a massive breakout. After the breakout on the 18th of February, the market then came into this consolidation phase. Now the consolidation phase is known as the liquidity phase. This is basically where smart money come in and they start uh, 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 grabbing liquidity from retail traders. And to give you an example of what that looks like, so most people that come into this market and they start scalping the market, for instance, right? So if you come into the market and you trade a so you're just a price action trader. So you would sell there, then you would buy here, and you can see how the market continuously spiked to the upside. Now this was also a trap for the buyers, because why? If you're a breakout trader and you saw this breakout and you saw these weak rejections, you'd have got in here because you'd have expected the market to continue higher. Instead, gold dropped lower, came back into the consolidation. We could potentially see gold go grab more liquidity at the back, and you will continue to see how gold is when any market is stuck within a consolidation phase. You'll normally see these weak rejections, because that's where stop losses for retail traders are. Now the best way that we are going to approach the situation as well, because gold is now currently trading at a daily support, because we can firstly see when the market came into this consolidation, this was the low of the consolidation, and that is the high of the consolidation there as well. Now, there's two ways that we are going to approach the situation. The first way is we're going to wait for gold to break above that level. Then on the retest, we're going to start looking for continuations to the upside there as well. Alternatively, if gold does want to fall to the downside, this is probably where the market's going to go before we can expect that continuation. Now, as retail traders, we have to be reactive and not predictive, and we need to learn to adapt to the ever-changing market. This was level of resistance which got broken. Potentially, the market could come and test it as support, but as I said before, sometimes your technical analysis is no match for the fundamental analysis. This market could just pull off here and just continue to the upside. So the next thing we are going to look at, now that we're done with the technical data, is we're going to look at the order flow data. Now, this is the commitment of traders, and this tells us what the big banks, hedge funds, and institutions are doing in the market. Now, based off last week's report, we can see how hedge funds came in. Firstly, they added 3.5k longs, then they came in and they added another 33,710 long positions, and they also added 6,803 short positions. Now you can see how the overall net positions had increased from a massive 186,000 to 186,706 to 213,613 as well. And this was all based off speculation that hedge funds came in because, like I said, they just like myself and you. If you fear, let's say wherever you are, you hear that there's a gang that's going to come and blow up your country within the next 2 or 3 months, the best thing you're going to do is start selling your house and look for safer places to stay. As a result of that, the value of your place where you stay depreciates. Then wherever you whatever places are considered safe haven places, that value will then increase because the demand for that area would then be higher as well. Now, the next thing we are going to look at is the impact that in terms of what we can expect from the whole tension going on between Russia and the Ukraine. Now you can see here it says that Russia and Ukraine crisis live update. It says here Biden announces sanctions as Putin steps up aggressively. Now I'm not going to read the whole article. I'm also going to go and look at what sanctions has been put in place over there. It says over here that Putin framed the troop movement as a peacekeeping effort, but Kremlin's decisions came after Russia amassed some 150,000 troops on its neighbor's border. So we know that Putin has been quite strategic in what he's trying to achieve, and we can see how he's been slowly moving his people towards the Ukrainian border. And as a result of that, countries like the US as well as the UK had proposed sanctions. Now, let's look at how that sanctions is going to affect Russia from a economical perspective. Now, the first sanction that was in place was Biden came out yesterday and he warns of proposal sanctions against Putin over Ukraine. Now, what were the proposed sanctions? Financial, not just that. On the money end of things, so Western powers could cut Russia out of the SWIFT financial system. And this would give Russia's ability to send and receive money abroad, because SWIFT is what moves money from bank to bank. So this move could damage Russia's economy immediately and in the long term as well. Second and also extreme, the US could obstruct Russia's access to US dollars, this global reserve currency that dominates international transactions. Well, we know those dollars transactions are cleared through the US financial system. So if Washington throw up barriers, Russia can't settle those transactions as well. So here it says which countries has threatened sanctions. It's both the US and the UK. But if there's one thing before I continue is, and here it says finally Western allies could limit Russia's access to technology that are needed, among other things, making aeroplanes fly and smartphones work. Now, if you are very familiar with the history behind Mr. Putin, like he doesn't give in to threats. So he's the kind of guy, because his desire to have Ukraine become one with Russia is probably bigger than anything else in the world. It's stronger than that guy that doesn't want to leave his ex-girlfriend alone, because he's gonna do whatever it takes for him to actually get back to her. So nothing is gonna stop him from doing that. Here it says warning comes as Western Union say Russian invasion of Ukraine has started with moves in Donbas. So it was also reported that the Ukrainian people in Ukraine had said that people that are in Russia from Ukraine needs to you know needs to move out, or needs to start well, they have to start to flee. So that also gives us an indication that we are slowly but surely coming to an end where we are going to see a couple of rockets fly left, right and center, and then from there things are just going to continue to escalate. Now as it stands now, US and UK are both threatening to to impact Russia's economy. But at the back of the back of Putin's head is this one thing: he wants Ukraine, and he's not going to stop at it. As we see how he slowly but surely has started to crawl into the border, and starting to set up massive camps in front of the Ukraine border. I mean, if you wanted to put an end to all of this, you would have just done it a long time ago. And then my man Goldman Sachs came out, raises gold's forecasts, says get long as heads against bad inflation. So that's a story that we know as well. The US inflation is quite bad. If you want to get an indication of how bad that inflation is, I've done a video yesterday on the Nasdaq 100 covering the current CPI inflation data for the US dollar, also giving you a good overview in terms of what the current economical status is of the US dollar and how bad things are going to get for consumers, but not for the dollar as opposed, because we know when the interest rate increase, we can expect the dollar to increase in strength there as well. But we can see here that Goldman is raising their forecast as well, so they're expecting gold to increase in value over time there as well. Now next thing is we're going to look at the sentiment data. Now the sentiment data tells us what retail traders are doing in the market. Now we can see here, based off the last report, that 70% of retail traders are long and 30% of retail traders are short. Now I would say you want to be on the opposite side of what the retail traders are doing, and this is a typical example of how retail traders trade. You can see 70% of them are selling the market. Now if you go back on the weekly time frame, I think it's quite clear why retail traders are selling the market, because they are they price action traders, so they sold the market at that level of resistance, kind of holding on to that wave. Some people probably jump in a bit later, but that gives us a further indication that we can definitely expect gold to start this massive impulse or continuation to the upside there as well. Because if you do take your Fibonacci there from the low to the high, you can see how gold had already tested and rejected the 0.382, which gives us a further confirmation that the bullish momentum of gold is quite strong. So one thing I always tell people, make sure that you're on the opposite side. So if 70% of retails are short, you want to be on the long side, because for every seller there needs to be a buyer. And remember, in the market you trade against people with a lot of money, so it's the smart money versus the dumb money, which is retail traders. And if the markets can grab 70% of that liquidity, then you can definitely expect gold to continue this move to the upside, potentially for the market to go and test, like I said yesterday, we can definitely expect gold to go and test that 1951 level, potentially going back to pandemic levels there as well. So that's a full update on gold. If you enjoyed the video, please smash the like button for the YouTube algorithm, and as always, let me know down in the comments below exactly what it is that you would like for me to cover in my next video. Thank you for your time, and as always, cheers for ears.